Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, July 15th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We had a pretty wild session over the last few sessions. You see, we had a very strong top that we talked about yesterday in the pre-market video, and we mentioned that could lead to some sort of a pullback over the next 1 to 5 days, unless price is able to reestablish back above the 3180, 3183 zone. And at the very end of the day, with a strong pop in the last 45 hour of the day, you saw price close at 3184, setting off another failed new low and a close beyond the mid, just like we saw before. And that has already led to strength that occurred right in the after hours open. That has continued to push higher here, and we're now right at the 32.31 quarter key range high. Today's high right now, 32.30. So we're right at that zone. And what's important about this is that this is the top of the key range. And the market has built energy here over the last month to month and a half here. And that energy now, if it is going to start breaking through the top of that range, we will see expansion to the upside targets that are defined by the range. So we have the 33.85 level that could be next, and then above that is the 35.38 level. So those are the two major upside targets, but price needs to be able to push through that 32.30 and make it support. And right now, the market is still strong overall. It was able to overcome some early weakness yesterday and weakness throughout the day with a lot of choppiness, a lot of volatility, and end of the day, again, above the 3180s. Big test here at 32.30. And again, we could still see rejection up here. We could still see a major rejection up here that could pull us back down. So you always have to be careful at a key range high, because that's where a higher high failure can occur. But at the same time, if price is able to really burst through that zone, 32.50, etc., we could start working toward the 50%, 100% extensions above. So very, very impressive market here, being able to bounce off of yesterday's lows. Another failed new low inside the PIMA trigger zone for a push higher. That's pretty impressive here, but continue to watch that 32.31 quarter level. If we take a look here at the NQ, this one was even more impressive here, because what we were looking for yesterday was a 1 to 3 day pullback, maybe a 1 to 5 day pullback, but with the very least of hitting that 10.393 level. And that was right near the lows of the day. It basically got that level, and the little bit that was traded below that level were trapped bears that eventually led to the squeeze here. By the end of the day, again, price was able to overcome 10,600 and a failed new low now. 1, 2, 3, 4, 5 days. Took out 5-day lows and closed back above the previous low and close. That's very, very bullish in most cases. Very, very bullish. And again, it looks like another buy the dip opportunity up here, right? Price pulls back, buy the dip and go. Price pulls back, buy the dip and go. And we've seen it over and over and over and over and over again since the March low. The problem here is that after too many rotations, at some point, it's going to fail. At some point, all good trends come to an end. And so as you continue to see more and more rotations here that offer these buy the dip opportunities, you got to be more and more careful, because you can have months and months and months and months, and then that one time it fails, it's going to be the big one, right? That takes you back to the 200 maybe. 200 right now is 87.85, so you don't want to be the last one holding the bag up here before maybe that big swoosh comes. But right now, again, hard not to at least look to be a buyer here, unless there's a failure to hold the 525 level. That's yesterday's midpoint. 525 will be very, very important. 500 is important. We could theoretically drop into 525s and still be a buy, unless that level fails. If it fails to hold that level, that's where a bigger pullback can come. And one thing that we're looking at in the trading room is the fact that we haven't tested the pivot range for the month yet. Here's the pivot range. We haven't tested it. We've gone higher. Pivot ranges are tested many times throughout a month, and each month at least one test. Not always, but many, 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 many months you see it happen. Last month, when it got away from that level and didn't get it early, it eventually came back and tagged it. So again, At some point later on this month, do we come back and grab that level? It'll be interesting to see how it plays out. Again, the 525 level will be very important. If price can continue to hold that zone, perhaps we continue a bit higher. But a failure to hold that level would be an early indication of maybe a failure to come. So just keep the options open here as this market continues to look very, very strong, but at some point may see some sort of flush. All right, let's take a look now at crude oil. You'll notice with crude oil, this one also got a very tremendous bounce in the previous session here. We had failed new low and price subsequently rallied, and now we're pushing higher here. Again, we talked about this strong low the other day and how that strong low could lead to a pretty nice bounce back toward 43s. But again, this market has been mostly compressed and hasn't really been able to see much directional conviction lately. But after going sideways here to begin the month, there is quite a bit of energy built up, and if the market can find some directional conviction here, we can get that 4 to 5 handle move very, very soon. So again, right now, watching these 41s here has been very clear resistance. Ascending pattern here. Again, above 41s could squeeze toward those 43s very easy, perhaps back up toward the 200-day moving average, which is a bit higher at 44. But right now, this market has been hesitant to really find that breakout move, but maybe this could be it. We'll continue to watch. All right, let's take a look lastly at gold futures. This one again looks very similar to the rest here. We've been trending up, failed new lows, and every time we see a failed new low, it leads to new highs, failed lows, new highs. Here we are again, rejecting those lows, and not quite seeing that breakout move just yet. Above 1820 will open up the upside pretty big time here, but this market is still just kind of sitting right on top of the 1800 level, forming this little box over the last 5, 6, 7 sessions. And whenever you form a box above a level like that and can't get going, those late longs tend to get stuck, and any push down through support here starts to run some sell stops. So again, that could lead to a bit of a pullback, perhaps into 1760 for a retest and go. So right now, just keeping an eye on this narrow range here, and while the PIMA trigger zone remains intact and everything remains strong, if there's a failure to hold 1800 here on a day basis, that could trigger a bit of a pullback. So right now, everything remains bullish until proven otherwise, and more upside could still be seen in gold. All right, I do want to remind you, I will be part of the Traders exclusive webinar event today. Today I'm up at noon Central, so 12 o'clock today I'm up, and I would love for the PivotBoss community to come out and support. Again, if you want to register for the event, look down into the description there and you will get a specialized link that you can sign up for. All right, everyone, looking forward to seeing you later on. Good luck, trade well, and I'll see you in the trading room. Take care.